Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the week of August 29th through September 7th or 2nd, where we'll talk about the fallout from Jackson Hole and all the other news events that occurred last week. And we'll do our market analysis. We'll look at all the markets, do our strategies. So hang around to the end. We'll talk about this fallout from Jackson Hole, our strategies for trading it going forward, as well as other strategies for trading the markets going forward, in hopes of helping you succeed in your trading career, irregardless of what kind of fallout we get and what kind of markets we find ourselves in. So welcome again, Walter Lyons, Spacula, Captain Matty. Thank you all for joining us for the live stream today, and thank you for everyone else who is watching this later. Again, this is part one of our weekly trading game plan for August 29th through September 2nd. And tomorrow, please, everybody come back for part two, where we'll select our individual stocks for our watch lists for this week. So we'll get started. So here's our notes for this week, and we'll be going through these notes. There's a link in the description box below to the Google Drive folder that contains all of our weekly trading game plan notes. It's publicly accessible, and I'll probably update it with the particular link for this document when we finish this. It has all the links to the various tools, etc., that we're going to use in our market analysis for part one of our weekly trading game plan. So we're going to start out, we'll look at FinBiz, we'll go to the home page of FinBiz, we'll see how the markets ended up on Friday. Everybody probably knows, so you can see it's bloody red. That's the fallout from the Jackson Hole Symposium, particularly the fallout from Powell's speech. I'll get into that more in the strategies, etc., but we can see pretty much at 10 a.m., right as Powell was speaking, we see those big red candles. The markets were pretty flat, actually up a little bit prior to that, and then after Powell came out and talked, the markets reacted negatively and plummeted from there. So we can see the vast majority declined. We can see many more made new lows. This is interesting. We'll see this when we look at the indices. The majority are still below their 200-day moving average, but the majority are still above their 50-day moving average. So most stocks are hovering between their 50-day moving average and their 200-day moving average. And when we look at the indices, again, we'll talk about what can we how can we trade that? What can we see in opportunities in that area? So very recent news from this morning. You see Volcker lives on at Jackson Hole. Again, this is all fallout from the Jackson Hole, from Powell's speech. He's quoting and invoking Volcker. We could talk about what that means again as part of our strategy. The stock markets finally got the message after Powell's speech. And then we got some Brazil, some foreign news. If we look quickly at the futures of oil, you can see it ran up a little bit recently. Natural gas is sitting about 930. It peaked up around 960 or so on Friday. We'll talk about how to play that when we get in the futures. Gold had been declining and it bounced up a little bit. And we can see all the indices pretty much are right to upper right to lower, or upper left to lower right, going down. So another interesting thing is we saw the 30-year Treasuries had been up a little bit, and there's quite a bit of inversion in these overall curves. We also see the euro to US dollar is still a little bit below parity. So this is at a very extreme, it's like a 20-year since the euro was parity with the US dollar. And again, we'll see this in further detail in the futures. So again, just a quick reminder, none of this is financial advice. We're not financial advisors. This is all for educational and hopefully entertainment purposes, in hopes of helping you succeed in your trading career, irregardless of the market. So now let's take a quick look at the indices. We'll start with the SPY. we see, it broke down through this pivot point, sharp decline, bounced off of this upper trend line earlier, bounced down, and then that's the Friday drop. If we go out a little further, I think we're going to see this in all the indices. Here's the 200-day moving average. It's still declining. And the 50-day moving average, so what we see is that, it tested that 200-day, rejected, came down, and hit the 50-day. And again, we talked about this last week. It's kind of what we expected to see, is it's going to have to test that 200-day moving average until it can break through with some conviction and volume. Now it's sitting at the 50-day moving average. So it would not surprise me, particularly given the dramatic reaction that we got on Friday, to get a reaction. Again, we've talked about harmonic oscillators before, and if you apply a force in one direction, you tend to get a reaction in the other direction. So I would not be surprised to see a bounce early in the week. We'll see based on news, events, anything else that happens. So let's look at the Qs, the NASDAQ. Yep, Walter, I believe that's exactly what we're going to see. Is the NASDAQ didn't actually even make it up to its 200-day. You see it peaked in the center of the range, rejected, and then went down. You see it's also sitting right at the point of its 50-day moving average. So again, I wouldn't be at all surprised to see a bounce off that 50-day for the indices. We'll look at the Dow. Yeah, we see the rejection off the 200-day moving average. It went down to the 50, maybe dipped a little below, and again, a bounce would not be unexpected. When we get in our strategy section, we're going to dissect these indices and sectors, etc. I believe we're seeing some divergences. Here's the Russell. Again, it went tested, barely tested its 200-day, rejected, came back down. It's not at the 50-day yet. So again, the Russell may have more downside based on what we're seeing. I'll look at the VIX as well. So obviously, the reaction in the markets to Powell's speech and the Jackson Hole Symposium, it gave it a kick in volatility, but it's, not a super high spike. It still went from 20 or so. It had gotten down to 20, went up to about 25. Right now, if I look in Thinkorswim, let's see, the VIX is sitting at 25.56. So again, we didn't see a dramatic spike. It's going to spike a little bit just given the market reaction. So I don't particularly expect a huge run up in the VIX unless something else spurs it. I would expect it to retrace, and then I don't know if it'll drop down below 20, but it'll probably get down to the 20 area again. So we'll go look at groups, sectors, etc. So again, everything was red on Friday. We see the ones least red were, energy, utilities, real estate, which have been the strongest over the bear market that we've seen. Again, for the week, energy, basic materials, utilities were the best. For the month, energy, basic utilities, basic materials, and utilities. So again, these sectors have been the strong ones in the bear market pretty much all year. Energy is outperformed for the year. And we're seeing, this sector rotation. They'll rotate out of energy, take profits, and they'll rotate back into energy. Same thing with basic materials, although basic materials is also sensitive to the US dollar-based, dollar-denominated materials, commodities, etc. And again, we're seeing this sector rotation is a given day. They'll rotate out of these top sectors and into the bottom sectors, and then the next day they'll rotate back. So just reading Walter's comment, the shift in energy was interesting. Yeah, and again, I'm going to talk about some divergences I think I'm seeing and how we can possibly take advantage of those. And maybe we'll talk about China a little bit. We'll see if anybody's interested. Maybe we'll talk about some of the events in China and that as we go forward as well. So we'll take a quick look at the industries. Again, mostly red. See the least red, some basic materials, energy, etc., agricultural inputs. Most red's probably going to be some of the technology, semiconductors. Again, the technology, the NASDAQ got hit pretty hard, so we'll see some biotech, some technology, semiconductors. And again, we'll talk about, opportunities given divergences. And okay, and here's another example of one of those divergences is last week we saw uranium was one of the poorest performers, and now this week uranium was one of the top performers. So again, I'm going to talk about this again in the strategy section, that I think we're now seeing intra-sector rotations. So within energy, again, I'll talk about this more, but I think we're seeing a divergence between natural gas, oil, uranium, coal, etc., and now they're rotating within those various components of the sector. So yeah. So for the week, uranium was top. We got some mortgage, etc., but for the month, coal was top, and then we've got oil and natural gas. Uranium is way down here for the month. So I hope that helps. And again, I've got a whole video, goes into more depth on how to drill down. There's several videos on how you can drill down to any of those sectors, look at the individual stocks, look at the charts, do further analysis, etc. So you can, there's also a playlist, a FinBiz playlist, and I believe they're all in that as well. So I would recommend those videos if you want to go into more depth in the sector analysis in FinBiz. And good morning, Flippa, the Shippa. Thank you for joining us. Glad to see you. Okay, so now we'll go into all the economic. We got a lot of economic data this week, and just a quick reminder, as this comes out, I usually grab it from investing.com, and we'll dig in there in a minute. As well, I'll show you another trick that I think is helpful with understanding economic data. But as this comes out, I tend to snapshot it. I snapshot the graphic from investing.com, post that in our Surf the Markets channel in our BeachBum Trading Community Discord. Also put the raw data there. You can find an invite to our Discord in the description box below. Also in the links section on our homepage, beachbumtrading.com, bum without the U, as well as links to all these tools, our social media, etc. So if you're not already a member of our Discord, it's free to join. Join us in our Discord, and for everyone's mutual benefit. So again, as this data comes out, I try to post it out there as quickly as I'm able to. So keep an eye on that channel for the economic data as it comes out. So what I wanted to show you as we scroll through this, I also put this data in our notes for our weekly trading game plan. So the table for these various economic data notes are here as well. It just makes it easy to reference. But I wanted to also show you in the economic calendar in investing.com, if I look at the week, one of the things, some of these terms are not, not commonly known. They have these, CPI and PMI and PCE and all these. And I can't assume that everyone knows what all these terms mean. So if you don't know what one of these terms mean, like, for example, what is PMI? One of the really nice things about this economic calendar in investing.com is you can click on any of these terms and get more data on the term, including a definition. What is it? What does it mean? This happens to be the Manufacturing Purchasing Managers Index. It talks about how is it calculated, how is it measured, gives you history, etc. So I just wanted to share that with everybody, that's a really nice feature, a way to get definitions for these various economic data terms. So in particular, I wanted to talk about the PCE that came out on Friday. I'm just going to click on that one, core PCE, as that is one of the primary things that the Fed looks at, and we'll look at how it came out relative to expectations in a minute. But this is the core personal consumption expenditure, so prices, and it measures prices, the change in price of goods and services purchased by consumers. So again, this is a consumer consumption thing. What are people spending money on? And why does the Fed care? And we'll talk about that now. We'll also see that this is trailing data. So again, if you want to get further definition, see history of these various economic data measures, I think this is a great way to get that information. So just since I'm sitting here at PCE, let's talk about it a second. We'll talk about jobless claims. But you see, core PCE came out pretty much as expected, but it was down. So the fact that it's down means consumption is a bit down. We also see GDP got adjusted. It's still negative. So by the technical definition, we're still in a recession. We saw continuing claims was down a little bit. Initial claims was down below expectations. So these things say to the Fed that the job market is still relatively strong, so they can be more aggressive, more hawkish in raising interest rates, that the job market, the economy is resilient, and therefore you heard the hawkish stance. And again, we'll talk about that more in a few minutes. And here's the core PCE index came out below. So consumption is changes in prices of consumers consumed things went down. So again, inflation is cooling. We talked about this a couple weeks ago. Inflation is cooling, but it's still hot. So again, we're going to talk about the fallout from Jackson Hole being that their priority is killing inflation, and they are resolute that they're going to stay on the job to kill inflation, despite some potential damage to the economy. Again, based on the fact that they believe it's resilient. The other thing I wanted to point out is, again, this data is trailing. So this was July data. So it's not current. So we saw slight decrease in this PCE index for July. So I'll go back a little bit earlier in the week. So here's that manufacturing PMI came a little below expectations. The housing market, is deteriorating. We're in a housing recession. We talked about that last week. Durable goods orders was relatively positive. So, that's, again, a resilience in the economy. Supply chain issues are getting resolved. Home sales still down. This was interesting, and I think I have an article down here. Yep. So, or a note that on Wednesday, oil inventories were down much more than expected. So supply decreased. They're drawing down on inventory. It was down 3.8 million. They only expected 1 million. So that would drive oil prices up. And yeah, Flippa, we when we were looking at the indices, I agree. It would not be surprising to see a bounce on Monday or early in the week, given the severe reaction that we saw on Friday. So Thursday, again, we get jobless claims. So it's again below expectations. We got GDP still negative. Initial jobless claims was down. And then we got this other number. The natural gas storage was much higher than expected. So that means there's more supply. So there's more in storage of natural gas than expected. One would have expected the price of natural gas to decrease, although what we're going to see, and I believe Walter's been scalping natural gas as well, as we have as well. And it was very volatile when this number came out. There's just a lot of volatility in natural gas, which is an opportunity. And again, we'll look at this in the futures, and we'll talk about it more tomorrow about how to trade that volatility in natural gas. And there's different strategies and time frames. Yep. Yeah, Walter's been doing great with using cold KOLD to short natural gas, and the inverse to long natural gas is boil. And again, given this volatility, if you're nimble like Walter is, I think you can make a lot of money based on that volatility. So again, we'll talk about that more too tomorrow. So when we saw these core PCE came out a little below expectations, so consumer spending is down a little bit, personal income is down a little bit, personal spending down a little bit. So the consumers is starting to spend less, which is positive for the Fed, right? Because consumer spending drives inflation, and the Fed wants to kill inflation. Yeah, we'll see all the agricultural futures as well in a minute. There's been some volatility there as well. Wholesale inventories were down, so people aren't building inventory. And we saw the consumer sentiment data, but there wasn't much attention paid to this because Powell came out, and that was the focus for the rest of the day, the rest of the week. But you could see the consumer, based on these sentiment survey, they're expecting inflation a little less than what the expectation was. Their expectations, general sentiment has been going up from the extreme all-time bottom, but it's improving month to month, and their expectations for inflation again is below what the expected value was. So there's the consumers starting to feel a little better about inflation overall, etc., than they were. So if we quickly look at what's coming up for next week, see if there's anything we need to. So housing on Tuesday, nothing much on Monday is typical. We got JOLT, so that's open jobs. We'll see if that continues to decrease, or is the job market tightening up any. We've got some more FOMC people talking. They'll probably reiterate what was stated coming out of Jackson Hole, mortgages. We always get crude oil inventories. We see it's expected to be down. And keep an eye, again, it's good to know when these inventory, if you're trading anything related to oil, natural gas, energy, etc., it's good to know when these data drops are. They're typically 10:30. And I believe, Wednesday's oil, there's gasoline there. I think Thursday is natural gas. I'll have to see in a second. Here's PMI, again, some PMI data, ISM, that's another purchasing manager indicator. Yeah, and there's natural gas is Thursdays at 10:30. So every Thursday at 10:30, we get data on natural gas. And obviously, again, that causes volatility, even if it's meets expectations, better, worse, it causes volatility. So then Friday, we get some jobs data, average hourly, we get payroll data, so jobs data on Friday. So again, that's, potential volatility on Friday. If that doesn't come out as expected, we can expect some volatility around that, factory orders, etc. So I hope that helps. So the next FOMC meetings, there was no meeting in August. That was the Jackson Hole meeting. And we're going to talk about that more. The next meeting is September 20 to 21. And as you'll hear, we're pretty much expecting, really expecting a 75 basis point hike. It could be 50. Some people are talking about 50, but I think the consensus is pretty probable on 75. And again, we'll talk about what some of the Fed officials were saying in terms of end-of-year rates expectations. Also in investing.com, I still didn't get anything from Benziga graphics, so you can always jump over to investing.com, see the earnings calendar for next week. We should be slowing down, we should be finishing up. We got some Chinese, Pinduoduo, got HP. Again, you could spin through this and see if there's anything related to something you hold, something you're looking to buy. In my humble opinion, right now, since these earnings are all from the last quarter, when we weren't certain we were in a recession and we didn't know if inflation had peaked and was coming down. So these earnings shouldn't be terrible. What's in my opinion even more important is their guidance going forward for the year. If it's below what was expected, you're probably going to see a very negative reaction. If it's better than expected, it should hold up or possibly get a boost. And I think we've seen that. I think we saw that in Snowflake, etc. It's all about the guidance, in my humble opinion. So keep an eye out for this. Know when your companies of interest are reporting earnings so you can trade and react accordingly. I hope that helps. So now let's look at the market screen in Webull. Just a quick reminder, they're still offering their 12 free stocks in Webull. I don't know how long this will go on. This is the highest offer of free stocks with Webull that I've seen. So if you're not already using Webull, it's our favorite trading platform. It's what we do the majority of our trading in. You can find our affiliate link in the description box below and in our links on our homepage, etc. So if you open your account in Webull, you get 2 free stocks up to $300 each. And then if you deposit any amount, a cent, a buck, whatever, you can get up to between 4 and 10 more free stocks valued each up to $3,000. So like I said, if you're not already using Webull, why not open an account, get up to 12 free stocks. You can always cash them out, take the cash, and move on if you don't want to use the platform. Although again, it's our favorite trading platform. So we'll jump over to the market screen. This is the online browser version of Webull. It's the platform I tend to use. I do use the desktop as well, but I typically use the online browser version. And I like this for market analysis, and you can see a video that goes in more detail about how to do market analysis in this market screen in Webull. We can see this histogram is useful. We see a lot more decliners than advancers. We see the advancers, the far out ones is a very small number. The majority of the decliners was kind of in a mid-range between 2 and 5%. See the net inflow. We see the NASDAQ really tanked at the end of the day. So there was this exodus of money from NASDAQ, tech at the end of the day, NYSE less so. Another feature that's nice in Webull is you can get the near-term earnings calendar right here. You just hit calendar earnings. You can see if somebody's reporting before market open or after market close. So again, is anybody that you're interested in reporting soon? You can see that here. And let's look at the best performing industries for the week, because we know on Friday everything was pretty much red. So here we see coal, uranium, so energy, renewable energy, so solar, oil, infrastructure. The worst, investment wasn't good, real estate not good, chemicals not good, natural gas, utilities, textiles, construction. Aerospace wasn't very good, which is surprising. I know there was a deal, Lockheed Martin got a big deal late in the week, and oil and gas was very positive. So I see what you're commenting on Spacula and Flippa. If you guys know how to tweak the Nightbot settings to make it more usable, please let me know. So we'll look at the ETFs here. I'll pop this guy up. Look at the indices. So down on the NASDAQ, down on small caps. Not surprising again with the sentiment at the end of the week, down on the Dow. Tomorrow we'll talk about several of these ETFs and which ones are the most attractive for playing, up or down, but in particularly the inverse ETFs to short the various indices, etc., as well as various sectors. So up on the VIX, UVXY is leveraged up on the VIX, down, bear on small caps, down on the Russell. Yep, several down on the Russell. Industry is pretty much red. Again, this is Friday, so, pretty much everything was red. I don't see any real bright spots. And commodities, somebody was just talking about wheat, and you see wheat up, copper up. Copper's had a resurgence, and we'll look at that in a minute. Again, wheat, cotton, agricultural general. And pretty much all the currencies are down. So the euro's down, everything's down. So the dollar's still very strong, and we'll see that in a second in the futures as well. Okay, so let's look at the futures. Just quick look at crypto. It was pretty red as everything else on Friday. Looks like Ethereum's at 1,500. Bitcoin's at 20K right now. So yeah, big down. Still a lot of discussion about crypto winter, etc. A lot of issues with the exchanges. So there's the big red candles on Friday. You see all of them had run up a little bit earlier in the week, and then they dumped. A little interesting is where that previous resistance, that previous bottom was. They've all broken down through their previous support level. So that doesn't bode well. More downside. Same thing with the Russell. We see the euro market really dumped too. There's that pop in the VIX. We see, oil had gone up, and now it looks like it's rolled over a bit. So all the oils, they've rolled over a bit. And you can see it's been declining. Oil's been declining. It makes these little pops, and then it continues declining. So, that would be an indication of a bear market in oil. So, seeing if there's anything I need to respond to in the chat a sec. So here's natural gas. We saw that spike up to 10, and then it dropped down pretty fast. I know, again, Walter and I were scalping that with cold. And then it pretty much went flat. There's still quite a bit of volatility. Again, you see that huge spike. That's when I think when the Powell talk came out, we saw a spike, or maybe it was when the inventory storage data came out. We saw a big spike, and then it dropped back down pretty quick. So Well, I hope. We're trying to help people learn additional ways. Spacula says, BeachBum Trading, you have inspired Walter to trade these ETFs much more frequently. Well, hopefully more profitably too. Um, let me see if I can get that one there. Let's show that quote. And there's Walter's response. And specula. Yeah, I mean, I hope so. I hope you guys are benefiting, able to benefit from the various techniques, trading techniques. That's our goal, is to give you tools so you can make money in any market, whether it be, stocks, techniques, ETFs, etc. So if there's any way we can help you succeed in your trading, please let us know. Give us a comment under the video, join us in the Discord, contact us via social media. Let us know how we can help you succeed in your trading and make more money. So that's the goal. And I'm still learning a lot. So and I'm learning from you guys. I'm learning from Walter that if I'm a little more nimble, I could probably make more money on some of these scalp trades, and so I'll try to do that. I'm not as nimble as some of you all. Um, so it's something I'm trying to learn, and other things. So we see gold, took a hit again. Dollar strength, it was increasing. It took a hit. We'll talk about tomorrow some opportunities I see in both of these areas and how to play them. So again, come back tomorrow for part 2. We'll talk about opportunities for taking advantage of this recent dramatic decline in gold, silver. Palladium really rocketed up. Unfortunately, I don't know a way ETF wise to short palladium, or I would have already done it. Somebody was talking about wheat, so we saw wheat bottomed and bounced. See that in several of the commodities. Corn's running up. I saw sugar had a crazy crazy run up. Coffee's gone nuts. Unfortunately, that's another one. I don't know of a way to short coffee. There isn't an ETF. The ETF to long it is JO, but I can't find one to short it. See lumber's kind of down, flat. So here's another interesting one, is Treasuries. We'll talk about our plays on the Treasuries recently, and what our strategy is for going forward on the Treasuries. But we can see they kind of made a bounce there. And we see the dollar again, it kind of, was very high, spiked up to a 20-year high, declined a bit. But then on Friday, again, this is partially a reaction to Jackson Hole, more fallout from the Jackson Hole Symposium. We got that burst up again in dollar strength. So we see the euro bottomed. It's sitting, a little below parity. And again, tomorrow we'll talk about how we're playing this. This is like, a 20-year low in the euro versus the dollar. Same thing with the Japanese yen. It had run up a little bit and then dumped. Again, strength of the dollar. And we'll look again tomorrow at any additional opportunities to play any of those extremes. Just to follow on to that, when I hear things like 20-year low or lowest ever or 14-year all-time high, or to me those are opportunities. When I hear that, it's like, okay, how do I play the contrary direction to that? So if it's a 20-year low, I want to be long. If it's a 14-year high, I want to be short, right? Because the probability is we're going to get a reaction in the other direction. And that's I call it extreme trading. I love to see those extremes or hear those, 20-year low, because that's I want to jump on that and play the other direction. So excuse me a second, then we're going to jump into all the fallout from the Jackson Hole meeting. Okay, can you guys hear me? Give me a thumbs up if you can hear me, hopefully. Okay, so let's talk about the fallout from the Jackson Hole Symposium. And this really ran the 25th through the 27th, so what, Wednesday through today or Thursday through today. Um, and I just listened to bits and pieces. They were having interviews with several of the Fed officials on CNBC, so I got some takeaways from a few of these. On the 25th, Bullard, who tends to be one of the more hawkish Fed officials, said he wants to see end-of-year rates between 3.75 and 4. The consensus otherwise was kind of up to 3.5, so people 2.5 to 3.5. Bullard wants to see 3.75 to 4. Bostic, who's I think the Atlanta Fed, came out on the next day on the 26th and said he sees rates or wants rates between 3.5 and 3.75. So again, a little bit higher than what previously we're expecting. He said also he was leaning towards a 50 basis point hike. Again, Bullard's more hawkish. This guy sounds like he's a little more dovish. So you get a mixture from the different Fed officials, and it ends up being a negotiation as to what they're going to do. And their next decision comes out September 2021. So Powell will come out on the 21st. That's when we'll get a decision. Before then, there'll be tons of speculation as to what this number is going to be. The reality is, and we've been talking about this for a long time, our strategy and the reality is interest rates are going up, right? So play accordingly, trade accordingly. Interest rates are going up. How high, how fast? Does it really matter? They're going up. Um, and that's how we should strategize, in my humble opinion. Again, not financial advice, but that's my opinion. So then we had Powell come out, and again, most of you probably heard it. You'll hear other commentary, but it was clear their priority is fighting inflation, achieving price stability, and he said unusually large rate increases could be appropriate at the next meeting. So that would seem to indicate, a 0.75 is more likely. Again, and so Powell is reinforcing that an unusually large rate hike, and he pointed out that a 75 basis point was an unusually high rate hike. And then you could see, and in our notes, reference some of these articles I snipped out as they came out, saying rates will rise until the job is done to bring down inflation. So he was pretty clear, right? They're going to keep raising rates until they get their 2% inflation. So that could be quite a long time. In fact, we're hearing this quote, higher for longer. So expect interest rates to be higher for longer. So we're going to be in a high interest rate environment for quite some time. How long exactly? Who knows? But again, we want to strategize and play accordingly. That we're going to be dealing with increasing and high interest rates for an extended period of time. So then they also said this, there's going to be pain of this tight policy, slow growth. So, and you'll hear other quotes that they're willing to cause pain in the economy. They see the job market as resilient. They see the consumer as resilient, the economy as resilient. So they're saying it can take rising interest rates. And yep, Flippa, he invokes Volcker. And they have pointed out that previous efforts, if they don't completely kill inflation in this first try, it's just going to come back. So they need to Volcker it. is pretty much what he's saying. And just a quick, I don't want to get too much into this or get political or anything like that, but I would speculate that Powell would rather go down in history more like Volcker, who was tough on inflation and got the economy back on track, than to go down in history as the guy that let inflation get out of control and end up with some kind of hyperinflation or recurring inflation. So, again, my hypothesis, but I think he may invoke Volcker more, but they're trying to stick tough to killing inflation, getting it down to their 2% goal. So I would expect a very aggressive approach on interest rates, and they're supposed to really ramp up their quantitative tightening in September. They've been not tightening as quickly as they had stated or as was expected up till now. They're supposed to tighten further, and that should reduce the monetary supply and should again tighten up the economy. So we'll see. So a couple other quick points, and then I'll answer questions, and we'll wrap up. And we can discuss this further in the Discord, etc. Is they've been passing all of these bills, spending bills. So they've got the infrastructure bill. They passed that. They passed the chip bill. They passed this inflation reduction bill. All these have a bunch of quote money allocated in them for various improvements, infrastructure, investment, semiconductor, etc. My question is, are they actually appropriating any of that money? Are they actually spending it, or did they just approve that they could spend it? And until I hear, because these are inflationary, right? When the government spends money, it causes inflation, right? They're putting more money in the monetary supply. That's what caused the inflation, is all the money they printed for the pandemic. So, they've approved all this money. Are they actually appropriating it and spending it? If they do, it's going to cause inflation. If they don't actually ever spend it, then it was a good political thing. They got good PR. They didn't cause inflation. So that's my question. I'm waiting to hear, are they actually appropriating that money? Are they actually spending it? Or was it just essentially good PR? So listen for that. Let me know if you hear anything. Very similarly, I didn't point out the bit with the student loan forgiveness, but that's just a whole nother topic. We can talk about that further later, but that's just a whole nother thing that, okay, that's essentially pumping more money into the economy. It's going to be inflationary, right? So there's some question of whether that can be challenged in court. We'll see if that happens. But again, if that goes through, pumping more money into the economy is inflationary. So you've got the government pumping money into the economy, and you've got the Fed trying to, which causes inflation, and then you've got the Fed trying to fight inflation and bring it down. So that's a battle right now, right? Well, don't do that. I'm glad you trust me, Spacula. I appreciate that, but but if I told you to jump off a cliff, I don't want you to do that. In fact, again, this is not financial advice, and I'll talk about this again tomorrow. I'm not recommending that anyone blindly follow my trades, my watch list, except my strategies. Everybody's situation is different. Your personality, what trading styles work best for you. Everybody's different. You've got to find what works best for you. I just hopefully here to help you see potential opportunities, ways you can make money in any market, and find your trading style that you can be a profitable, consistently profitable trader for the rest of your life. Again, I believe this is a life skill. If you can make money trading, you can trade, and make money for the rest of your life. So that's my goal. So again, I won't babble about that further right now. Welcome, Tanavir. Glad you made it. Glad to see you again. So the final topic, strategy I want to talk about, and we'll continue. We've been talking about it. We'll continue to talk about this. Is the sector rotation as we looked at groups and the futures. We've talked about this for a couple of weeks that we're seeing. I believe it's the money managers trying to get alpha, trying to make a return. And to do so in this choppy market, essentially you've got to rotate. So you've got to find what's going to go up next and take your profits when it peaks out. And then again, rotate into, okay, I took my profits in that sector. What's going to go up next? Well, they typically pick the worst performing sector, and like, for example, take money out of energy and put it into real estate, or take it out of energy and put it in technology. They're not looking at the macro view in that standpoint because technology gets hurt by increasing interest rates. They're looking for these short-term sector rotation gains. Take your profits, get out, rotate around, and I believe that's what we're seeing a lot. So that's the way to play it, right? If that's the game they're playing, then let's make money playing their game. Is my opinion again. So the other thing I wanted to point out, we started talking about this last week, and I really saw it this week, is this divergence of and separation between the components of the sector. And I think it was Wednesday, it was Thursday in particular, we saw this divergence of biotech and semiconductors from technology. At one point, Lab D, which is the short on biotech, was up, and SOX S, which is the short on semiconductors, and SQQQ, which is the short on the NASDAQ, were down. So we're starting to see this divergence, and I think there's an opportunity in that we could pick the one that's going in the direction we want to trade. And again, they were all going up and down with the Qs. And now I think we're seeing some level of divergence, and we could take advantage of that. So, and then Friday, as the markets dumped, obviously all the shorts went way up. So I didn't really, wasn't able to catch that dump, but I think some of you did and made some good money on that as well. Also within the energy sector, we're seeing divergences between oil, natural gas, and uranium. Again, those were all going up and down together with the XLE. Now we'll see one day oil's down, natural gas is up, and uranium's up. So again, looking at those intra-sector, the divergences, and they're rotating among these, coal, etc. So watch the industries. We have to dig down now, I think, to the next level and look at the industry within the sector, because one's going to be up, one's going to be down, and they're probably going to rotate money from the worst performer to the best performer within sectors and within industries. So that's going to be something I'm looking at going forward this week, is these divergences, these intra-sector rotations, as well as the sector rotations, and where we can find opportunities in those. So I hope that all helped. So if I missed any questions, please put them back up in the chat. I'll try to answer some questions for a few minutes. And again, you can always post your questions in the comments underneath the video. Again, please, if you're not already joining us in our BeachBum Trading Community Discord server, it's free to join. You can find an invite in the description box below. We can always continue the discussions in our Discord. There's chats for different trading styles, different commodities, etc., different asset classes. So we can always continue asking questions and helping each other answer them within our BeachBum Trading Community Discord. We also have a Facebook group, so same way. Just a quick check to see if I'm missing any questions. If not, I'll wrap up. And again, please come back for part 2 tomorrow. So we're going to look at all this fallout from the Jackson Hole Symposium, our strategies for going forward, and which individual stocks, individual ticker symbols are we going to put on our watch list for next week, to try to take advantage of these, the various fallout, the various strategies, etc. So again, thank you all for joining us for the live stream and or for watching our video. We hope you liked it. Please smash the like button. We really want to grow our BeachBum trading community, both here on YouTube, etc., and in our Discord, for the mutual benefit of all of our fellow BeachBum traders. So we hope you're subscribed to our YouTube channel, and click the notify bell icon so that you get notified when we do live streams, when we drop further videos during the week. We also drop various due diligence videos, etc., educational videos on various techniques. So again, subscribe, click the bell icon, and we appreciate your time, and have a great rest of your week. See you tomorrow.